All right, I thought I'd do a quick update on silver. If you remember from one of my previous videos, you know, a lot of people were calling for a top right in here. I said it was too early. Silver needed to give us that big final um, rocket launch that usually occurs towards the end of an intermediate cycle. It did. I said at the time, buying stampedes usually last anywhere from 7 to 14 days. This one lasted 8 days. And these kind of moves usually go up just about as fast as they go down, or go down about as fast as they go up. And you can see that's what's happening. And I warned that all of the late buyers that bought into this um, vertical move, thinking that this was the beginning of something, were going to get caught and stopped out. And that's exactly what's happening here. But now, we've pretty much stopped out all of these late buyers. It's getting time for a bounce. Gold is very late in its daily cycle, um, and it's going to be due for a bounce. The stock market's going to be due to take a breather. The dollar may roll over into at least a recognizable daily cycle low, and it's time for the metals to give us a convincing bounce. So yesterday, I noted when we had this rally that I would need to see how it closed. If it had closed above the 10-day moving average, then maybe that was a daily cycle low. But it looks like we still got another day or two early next week. Maybe gold tests this 50-day moving average. But then I think we're going to have a very convincing bounce. Probably, at least come back up and test the 1520 resistance zone. We might even make a double top or maybe even just a marginally higher high in gold. I don't think silver or miners will make a higher high, but they too should have a convincing bounce. And then once that bounce wipes out all the shorts that got a little too eager here, and gives the bulls some hope that that was it, that's all there was going to be, then we should roll over again and we'll get a C wave down uh, into a final bottom. Minimum target would be about 1450, would be a 50% retracement of this rally. All right, I'm sorry. The 38% retracement is about 1450. 50% would be 14. Let's call it 1420. Would be a 50% retracement. That would be completely normal in an ongoing bull market. We might even come down to test that breakout at 1380, which would be the 61% retracement. I have no idea at this point where we're going to, but we are very late in this daily cycle. Here was our daily cycle bottom here. Get rid of these Fibonacci levels. Here was our last daily cycle low. We're getting the next one. We're putting it in now. It's very late. I think we're about 50 days, maybe a little over 50 days. So we're due any day now. My thinking is we'll probably bounce off the 50-day moving average early next week, and then after the FOMC meeting, I think stock market tanks again, and I think gold rallies, and the dollar drops down into a daily cycle low, and and that rally should wash out the short-term bearish sentiment. Intermediate term, we still have a ways to go, but short-term sentiment is getting excessively bearish in the metals, and it's time for a 8 to 10, maybe even a 15-day bounce before gold turns and comes back down and gives us that final intermediate cycle low. At this point, I'm thinking it's probably going to come middle of October or early November would be our final intermediate cycle low. But we're getting ready for a convincing bounce here. Thought maybe it might have started yesterday, but it didn't hold those gains. So we've got one more push lower, and then I think we get a very convincing rally in the metals that'll set up the next leg down.